We all see the Apple logo everywhere, right? The sleek designs, the buzz around new iPhones. But have you ever wondered what's really going on inside a company like Apple?
Mm.
Today, we're not just looking at the shiny exterior. We're diving deep, really getting into the nuts and bolts using Apple's own annual report. That's the Form 10K for the year ending September 28th, 2024.
Exactly. And these 10Ks, they're not just boring financial documents, not at all. Think of it more like Apple's own playbook. It lays out their financial health, sure, but also their strategy, what they sell, and importantly, the risks they see on the horizon. It's incredibly revealing.
Revealing is a good word. It covers, well, pretty much everything.
Yeah.
What Apple actually does, their products, their services, the financial details, potential problems. Our mission here is to pull out the really key stuff, the insights that help you understand Apple without, drowning you in accounting terms or legalese.
Yeah, consider us your guides for this deep dive. The 10K itself is structured. Part 1 is business and risks, Part 2 gets into the financials, Part 3 is about governance, like who's in charge, and Part 4 is supporting documents. We'll be grabbing bits from all over to paint the picture.
Okay, let's start unpacking. What is Apple in 2024? We know the name, obviously, but what are the core parts of the business now?
Right. So at its heart, Apple designs, makes, and sells tech. Really user-friendly, well-designed tech. The big one is still the iPhone. You've got the iPhone 16 Pro, the 16, but also older models like the 15, the 14, the SE.
Still covering a range of price points.
Exactly. Then there's the Mac line for computers, MacBook Air, MacBook Pro for laptops, iMac, Mac Mini, the powerful Mac Studio, Mac Pro. For tablets, it's the iPad line Pro, Air, the standard iPad, iPad Mini.
Okay.
And then you've got this whole growing area of wearables, home stuff, accessories, Apple Watch Ultra 2, Series 10, Apple Watch SE, AirPods, AirPods Pro, AirPods Max, Beats products too, even the Apple Vision Pro, their spatial computer. And for the home, Apple TV, HomePod, HomePod Mini.
It's a huge ecosystem of hardware, but it feels like Apple's story now is just as much about services, isn't it?
Oh, absolutely. You nailed it. The services business is massive and increasingly important for them. We're talking advertising on their platforms, Apple Care support plans, iCloud services linking everything together, and of course, the App Store.
The App Store is huge.
Huge. Plus, all the subscription stuff. Apple Arcade for games, Fitness Plus, Apple Music, News Plus, Apple TV Plus for their shows and movies. And finally, payment services like Apple Card and Apple Pay are getting pretty integrated into how people manage money.
Gotcha. Now, this report, it ends September 28th, 2024. That's their fiscal year end. Why September? Most companies use December 31st.
Yeah, that's a common question. Apple's fiscal year ends on the last Saturday of September. It basically aligns better with their big product launches, especially the new iPhones, which usually come out in the fall.
Okay, that makes sense.
It's usually 52 weeks, but sometimes, like in 2023, it was a 53-week year. Just something to keep in mind when you're comparing year-over-year numbers.
Right. And how do they slice up the world for reporting geographically?
They break it down into 5 main segments. There's the Americas, then Europe, and that Europe segment is broad, includes India, the Middle East, Africa too.
Interesting.
Then Greater China, which is mainland China, Hong Kong, Taiwan. Then Japan on its own. And finally, the rest of Asia-Pacific, which includes places like Australia. So different management for each, catering to local markets.
Okay. Now, the report mentions seasonality. Does Apple have a particularly busy time of year?
Oh, yeah. Historically, their biggest quarter by far is their first fiscal quarter, roughly October, November, December. It lines up perfectly with the holiday shopping season in many parts of the world, so Q1 usually sees the highest net sales.
Makes sense. Holiday gifts and all that.
Oh.
And I guess new product launches must shake things up quite a bit, too.
Huge impact, yeah. When a new iPhone or Mac drops, it really affects revenue, costs, expenses, even inventory levels everywhere. You often see sales of older models dip a bit just before big launch as people wait for the new thing.
Right, the anticipation. Okay,
Yep.
Let's talk about the people. The report mentions human capital. What does Apple emphasize about its employees?
They make it pretty clear that their people are, fundamental to their success. Big focus on attracting, developing, and keeping talent. They talk about wanting an inclusive, safe, supportive environment. As of the report date, they had about 164,000 full-time equivalent employees.
Wow, that's a lot of people.
Yeah.
How do they approach things like pay and benefits for such a large group?
Well, their stated philosophy is to be competitive in the market, but also equitable internally. They want employees to sort of share in the company's success. They mention comprehensive benefits, health, wellness, time off, and they invest in employee growth, like through Apple University, which offers internal courses on leadership, culture, skills.
Sounds like they put effort into the culture side.
Seems like it. They stress commitment to equal opportunity, diversity, inclusion, a workplace free of harassment. And they mention using employee surveys to get feedback, keep communication open.
Okay. Now, no company exists in a vacuum, right?
Mhm.
Especially not Apple. What sort of big picture macroeconomic or industry-wide risks do they highlight in this report?
Yeah, there are several key ones. First, just the overall health of the global and regional economies. Big downturns mean less demand for premium products like theirs. It can also hurt their suppliers or financial partners.
And given their global footprint, trade issues must be a worry.
Absolutely. Things like tariffs, export controls, they can really mess with the supply chain and drive up costs. A lot of their manufacturing partners are in places like mainland China, India, Vietnam. So tensions, like between the US and China, are a direct risk.
That forces them to constantly reevaluate where things get made, I imagine.
Exactly. Diversifying manufacturing isn't simple or cheap. It involves huge logistical and financial planning.
Innovation is obviously key for Apple. What are the risks tied to that constant need for the next big thing?
Well, they have to keep innovating and launching new stuff on time. That means massive R&D spending. And there's always a risk that those bets don't pay off or that new products just don't click with customers. Plus, they have to fiercely protect their designs and ideas, their intellectual property, because competitors might try to copy them or just compete aggressively on price.
And managing the switch from old products to new ones? That sounds tricky.
It is. It's a real balancing act. They need to generate buzz for the new stuff, but also manage inventory carefully. Don't want shortages, don't want warehouses full of old models. And sometimes new products eat into sales of existing ones or have different profit margins.
Right. They also rely heavily on outside companies for manufacturing and getting products delivered, don't they?
Yes, hugely reliant on outsourcing partners, mostly in Asia, for making the products and the logistics. It saves costs, sure, but it also means less direct control over quality, how much gets made, and how fast they can react to changes. And sometimes, for very specific custom parts, they might only have one supplier.
That sounds like a potential weak link.
It can be, yeah. A single source supplier issue can really disrupt production.
What about the tech inside the devices? Any risks there?
Definitely. They license some core technologies from other companies. If they can't get those licenses renewed on reasonable terms or at all, they might have to redesign products or change services. And the software side is critical too. They need third-party developers making apps for iPhones and Macs. If those developers decide, say, Android or Windows is a better bet.
That could hurt the appeal of Apple's platforms.
Exactly. The whole ecosystem relies on those developers.
And speaking of that ecosystem, the App Store itself has been under a lot of scrutiny, hasn't it?
Oh, for sure. The way they run it, the commissions they charge, the rules, regulators and developers are constantly looking at it. Changes forced by things like the Digital Markets Act in the EU or legal challenges in the US could definitely impact their finances if it means lower App Store revenue or different commission structures.
Right. And for content music, videos, they depend on deals too.
Yeah, for a lot of it. Music licenses, movie deals, these things expire or get more expensive. Content owners might go exclusive elsewhere. And making their own original content, like for Apple TV plus Reg, costs a lot upfront and has its own risks.
Yeah.
Will people watch it?
Okay, moving towards the legal and regulatory side, it feels like all big tech is facing more heat these days. What legal risks does Apple call out?
Yeah, that's a big section. They point to potential negative outcomes from lawsuits and government investigations, especially around antitrust. There are active lawsuits claiming they monopolize the smartphone market, investigations in Europe about App Store rules. The whole Epic Games lawsuit is a good example of these challenges.
That injunction about letting apps link out.
Right, that came out of the Epic case. It shows the real-world impact of these legal battles.
It really does feel like the whole industry is under a microscope.
It is. Apple specifically mentions the increasing scrutiny from media, politicians, regulators. This can lead to tougher rules, more investigations, more lawsuits.
And just keeping up with all the different laws around the world must be a massive job itself.
A huge challenge, yeah. Complying with constantly changing laws on privacy, data security, specific areas like health apps or financial services, or even new stuff like AI, it's complex and expensive.
Privacy and security seem non-negotiable, given the data they handle.
Absolutely crucial. Any slip-ups in handling personal data health info, financial details, biometrics could be disastrous for their reputation and lead to huge legal problems.
Okay, let's switch to financial risks. What kind of money-related uncertainties do they flag?
Well, they expect their quarterly results, sales, profits to bounce around. That's pretty normal for consumer
That's
electronics.
sure.
Profit margins are a key focus too. They face pressure from competitors, cutting prices, rising costs for parts or content, the mix of products they sell shifting, foreign currency swings, inflation. Even launching new products can sometimes squeeze margins initially.
The report mentions sales being heavily concentrated in one product. They don't name it, but
Yeah.
it's the iPhone, right?
Yeah. They don't spill it out. But yeah, given its history and massive contribution to revenue, that's the overwhelmingly likely candidate. If demand for that core product were to drop significantly, it would really hit their overall numbers hard.
And being so global, currency fluctuations must be a constant headache.
A big one. When the US dollar gets stronger or weaker against other currencies, it directly impacts the value of their international sales and the cost of components they buy abroad. They use financial tools, derivatives like forward contracts, to try and hedge some of that risk to smooth things out a bit.
What about credit risk? Who owes Apple money, typically?
Mostly it's money owed by the big phone carriers, wholesalers, retailers who sell their products. That's accounts receivable. There's also risk with prepayments to suppliers or money owed by vendors. This risk gets higher in bad economic times, obviously, and sometimes a lot of that money might be owed by just a few large companies, especially carriers or suppliers in Asia.
Okay. And interest rates, how do they affect a giant like Apple?
Changes in interest rates can impact the value of their huge investment portfolio. They hold a lot of cash and securities. It also affects the interest they pay on their own debt. Again, they might use tools like interest rate swaps to manage this risk.
Got it. Let's look at the actual performance in 2024 compared to 2023. What were some highlights from the numbers?
One key thing was an increase in their overall gross profit margin. It went up from 44.1% in 2023 to 46.2% in 2024.
That's a pretty healthy jump.
It is. It came from better margins on both products and services. For products, they mentioned cost savings helping, though the mix of products sold and some currency headwinds partly offset that. Services margin also improved thanks to higher sales and a more profitable mix of services.
So good cost control and maybe strong pricing power.
Seems like it, yeah. Which is important because that helps fund things like R&D.
Speaking of R&D, how did their spending look?
R&D spending went up, mostly because of higher headcount costs more people working on future stuff. Selling, general, and administrative costs also rose.
And taxes. That effective tax rate change looked pretty dramatic.
It was a big jump, from 14.7% in 2023 up to 24.1% in 2024. The main driver was a huge one-time tax charge, about $10.2 billion, linked to that European Commission ruling about Irish taxes.
Ah, the state aid case.
Exactly. Plus some higher state taxes in the U.S. They did get some benefit from lower rates on foreign earnings and R&D tax credits, but that big one-time charge really pushed the overall rate up. Just for context, that European Commission order was for Apple to pay back around $13.1 billion plus interest.
Wow. So with higher margins, but that big tax hit, what happened to the bottom line, the net income?
Net income actually dipped slightly. It went from about $97 billion in 2023 down to roughly $93.7 billion in 2024. So that tax charge was the main reason for the decrease, despite the stronger underlying margins.
Okay, let's quickly touch on their overall financial position. End of 2024, what did the balance sheet look like? Assets versus liabilities.
Assets were around $365 billion. Liabilities about $308 billion. Assets included tons of cash and marketable securities, plus money owed to them, receivables, and inventory. Liabilities included money they owe, payables, revenue collected but not yet earned, deferred revenue, and their debt.
And cash flow. Where did the money move during the year?
They generated a lot of cash from operations, starting with net income, then adding back non-cash things like depreciation. Investing activities mostly use cash for buying equipment, building facilities, capital expenditures, and investing in marketable securities. Financing activities saw huge amounts of cash going out, mainly for buying back their own stock, nearly $95 billion spent on that.
$95 billion on buybacks. Wow.
Yeah, massive, plus paying dividends and paying down some debt.
And speaking of debt, what's the situation there?
They had about $10 billion in commercial paper outstanding, which is short-term debt, up from $6 billion the year before. They also carry significant long-term debt with various maturity dates, and they have future commitments for leases on stores and offices, about $849 million worth not yet started.
Okay, nearly there. Let's shift to governance for a moment. The report mentions an insider trading policy. What are the basics for Apple insiders?
Right. So executives, directors, certain employees, they're banned from doing short sales of Apple stock or using complex hedging strategies or trading derivatives on Apple stock ever.
Okay.
Plus, there are specific blackout periods, usually around earnings releases, when they just can't trade at all. Outside those times, there are open windows. Some things are usually exempt, like when their restricted stock units, RSUs, vest automatically, or buying stock through the employee plan. It's all about preventing trading based on non-public info.
Makes sense. And what about these Rule 10b5-1 plans mentioned?
Ah, yeah. Those are pre-planned trading schedules. An insider can set one up when they don't have any material non-public information. It just specifies exactly when and how many shares they'll sell in the future.
So it takes the decision out of their hands later on.
Exactly. It's designed to avoid any suggestion that they decided to sell based on some inside scoop they got later. The plan has to be set up in good faith, spell out the trades, and the insider can't influence it afterwards. The report actually notes that two top execs, Deirdre O'Brien and Jeff Williams, set up new plans like this back in August 2024.
Interesting detail.
Mhm.
Okay, last policy point. Rule 10d1 recovery policy. Sounds like a clawback policy.
That's exactly what it is. It's overseen by their compensation committee and applies to incentive pay, like performance bonuses given to top executives after October 2023. If Apple has to restate its financial results because of serious errors.
Like if the number were wrong.
Right. Due to material non-compliance with reporting rules. Then Apple has to try and recover any incentive pay from the previous 3 years that was awarded based on those incorrect numbers. And importantly, the executives don't get indemnified, meaning Apple won't cover their losses if the money is clawed back.
So if bonuses were paid based on faulty accounting, they might have to give them back.
Pretty much, it adds accountability.
Okay, so wrapping this up, this deep dive into Apple's 2024 10K really shows just how much information is packed into these reports, doesn't it? It's way more than just profit and loss.
Absolutely. It paints a picture of their whole operation, their products, services, global reach, the people, the strategies, and yeah, all those complex risks they're navigating. Economic shifts, supply chains, innovation pressure, competition, regulation. It's all interconnected.
And hopefully we've managed to give you a clearer view of some of those key parts without getting too bogged down in the jargon. So thinking about everything we've covered, the economy, supply chain issues, the need to innovate, competition, regulators, the financials, what do you think is the single biggest challenge or maybe the biggest opportunity facing Apple in the next year or so? Something to chew on. And of course, if you really want the nitty-gritty, the full 10K is out there, available for anyone to read.